Our take on the best secondary markets to watch in 2025. Venus Ventures Real Estate Insights. As we move into the second half of 2025, the commercial and residential real estate landscapes are evolving rapidly. While major metro markets continue to draw investor attention, it's the secondary markets, smaller, fast-growing cities with strong fundamentals, that are showing some of the most promising opportunities. At Venus Venture, we actively monitor market data, migration trends, economic indicators, and local developments to identify emerging hotspots for investment. Here's our expert take on the top secondary markets to watch in 2025 and why they could offer superior risk-adjusted returns in the years ahead. 1. Raleigh-Durham, North Carolina. Why it's hot: strong job growth in tech, biotech, and healthcare. Home to top-tier universities and research hubs. Affordable cost of living compared to coastal markets. Investor insight: Raleigh-Durham continues to attract both young professionals and companies relocating from expensive metros. With strong rental demand and steady appreciation, multifamily and mixed-use projects are thriving. 2. Tampa-St. Petersburg, Florida. Why it's hot: business-friendly policies and tax advantages. Influx of remote workers and retirees. High demand for workforce and senior housing. Investor insight: while Miami grabs headlines, Tampa offers better cap rates and growth potential. Value-add multifamily, build-to-rent communities, and medical office spaces are particularly attractive here in 2025. 3. Boise, Idaho. Why it's hot: continued in-migration from West Coast states, low unemployment, high quality of life, tight housing inventory, and rising rents. Investor insight: Boise offers a unique mix of small-town charm with big city upside. Demand for affordable rentals and suburban townhomes is strong, making it a smart play for developers and long-term holders. 4. Greenville, South Carolina. Why it's hot: growing advanced manufacturing sector, infrastructure improvements, and urban renewal. Low cost of doing business and living. Investor insight: this once overlooked town is emerging as a regional industrial and logistics hub. Investors are finding success in warehouse-to-retail conversions and workforce housing near redevelopment zones. 5. Indianapolis. In why it's hot: central U.S. location and strong logistics network, affordable housing and consistent rental returns, diversified economy with stable growth. Investor insight: Indy flies under the radar but offers one of the most balanced profiles in the Midwest. Whether you're investing in small multifamily, self-storage, or medical facilities, this market delivers reliable cash flow with low volatility. Why focus on secondary markets in 2025? Several macro trends make these markets especially attractive right now. Affordability crisis in primary markets is pushing people and businesses to smaller cities. Remote work flexibility allows people to live where lifestyle and cost of living align. Local governments in secondary cities are incentivizing development and attracting employers. Cap rates in primary markets remain compressed, while secondary markets offer better spread and lower competition. Venus Ventures' investment thesis focuses on identifying value early, deploying capital before a market becomes saturated, and executing value-add strategies that generate high-yield returns. What we look for in a secondary market. When evaluating markets, our team assesses population growth and net migration, employment diversity and economic development, rent-to-income ratios, infrastructure spending and revitalization projects, supply pipeline, and housing demand. These factors allow us to move with confidence, knowing we're investing not just in assets, but in cities with long-term upside. In 2025, smart capital is shifting to secondary markets with primary-level fundamentals. These are the places where growth is real, competition is manageable, and returns are strong. At Venus Venture, we're not just watching these markets, we're actively investing in them, sourcing off-market deals, and executing strategies that turn overlooked neighborhoods into thriving investment hubs. Looking for your next high-growth opportunity? Let's explore these markets together.